Hello, Internet. My name is Ryan Ingram, author of Rental Property Insurance, an investor's guide to insurance. You can download a copy for free at reinsurancebook.com. That's in the description below. You could also buy a copy on Amazon if you'd like. And today we're going to talk about the coverage letters of your insurance policy. Over the past two videos, we've discussed the differences between a homeowner's and a dwelling fire, the actual cash value versus replacement cost, and then also the policy forms, the basic, broad, and special. So now today we're going to talk about more of the similarities between the homeowners and dwelling fires, and that leads us to the coverage letters. Now, most insurance policies have the same coverage letters, and let's go over those now. Now, those are most commonly A through F. So, coverage A. Coverage is often abbreviated as COV, coverage A. Now, coverage A is the residence. This is the actual structure that people live in. Anything attached to this is going to be under coverage A. So if it's an attached garage, it'll be included in this price. I think that's simple enough. Coverage B is other structures. This is anything on the premise that is not attached to the residence, but still a permanent fixture. These are things like fences, detached garages, sheds. It could even include pools, but hopefully your rental property does not have a pool. Coverage C is personal property. Coverage C, that's personal property. Now that is anything that you own. If it's inside of your house, this can be your computers, your furniture, your appliances, anything that you own that is the actual contents. I absolutely hate thinking about this, but a few ways that I've heard people describe this is coverage C is anything that would fall out if you picked your house, turned it upside down, and shook it. Ugh, I hate that. Personal property on a rental property is really not that common. If you have student housing or Airbnb, this would cover the furniture inside or anything that you provide. If you provide appliances, your stoves, fridges, things like that, depending on the insurance company, some people that consider that attached to the residence, especially furnaces, that would be most certainly attached and part of the home. Your fridges, your ranges, stoves, microwaves, anything like that that you might provide the tenant could potentially be under coverage C. Coverage D, this one is important, and that is loss of use. Now, coverage D, different insurance companies call this one a lot of different things. I think this is the one that varies the most. Coverage D is loss of use, loss of rents, loss of income, anything like that. So if this is your homeowner's policy, then what coverage D will do is, let's say a kitchen fire occurs and the property is uninhabitable. You cannot live there. Coverage D will pay for you to live in a hotel, to rent a house, or provide you some sort of alternative housing until this is fixed. Coverage D on a rental property would be loss of rents. So if that same kitchen fire happened, your tenant couldn't live there for, let's say, 2 months while the property was being fixed, then you would get 2 months of the fair market value rent. So if you're under market, let's say you had the property rented out for $100 for some strange reason, and the insurance company would come in, they would do an assessment of the market pretty quick, probably using something like Rentometer or Rentometer, and they would determine how much the average market for that size home is renting for. If it's $800, then you would get $800 times 2. Also, if you have the property rented out for $1,000 and that rent comes back at $800, you would still only get that $800 for 2 months. Now, I've had a few investors ask me, with this money, should I put my tenants inside of a hotel or another rental property while this is being fixed? And honestly, I would not. Generally, most investors require tenants to have their own renter's insurance policy during this time. If the tenant had a renter's insurance policy, as your lease required them to, then their insurance policy would pay for them to live somewhere else while that property is being fixed. And hopefully, if they had a renter's insurance policy and they were the ones responsible for the kitchen fire, then that policy would also pay for all of the damages, leaving your policy untouched. So the claim wouldn't fall on the insurance policy that you pay for, it would fall on the tenants, which long term, especially the more doors you get, would greatly help you keep your insurance costs very low. So these are all of the coverages for the actual structure and the things that you have. Once we go to coverage E, this is personal liability. This is commonly 100,000 to 1 million. And generally this is written on a per occurrence. So coverage E has two components, per occurrence and then aggregate. Aggregate is for the entire policy period. For the per occurrence, let's say your limit is $100,000. You have a tenant that sues you and they receive $100,000. Now, for the aggregate, it's generally double. So you have $100,000 per occurrence, $200,000 aggregate, or per policy period. So if you get sued again, then you have up to $100,000. And then if you have a third claim in that same policy period, you're just out of luck. And quite honestly, the insurance company is probably going to cancel you shortly thereafter. 2 liability claims in the same policy period, that is really, really bad luck. And lastly, we have coverage F. Now, coverage F is medical payments. Now, what this is commonly kind of joked about as being the don't sue me money. So if, let's say somebody slipped and broke their ankle on your policy, then the insurance company would come in with coverage F absolutely as quickly as possible and pay for all of the immediate medical expenses. And in this, they would hope to get a hold harmless agreement in exchange for taking care of those immediate medical expenses. That would prevent it from going into a personal liability claim, which has the potential of being much larger. So by and large, these are the most important coverage letters. Now, these are the same for the homeowners insurance policies, the dwelling fire policies. If you have renter's insurance, then these letters would be the same. They get a little bit different if you go from residential to your commercial insurance policies, but by and large, these are generally about in the same order. They just might not have the same letters. So let me know if you have any questions. Again, you can get some very helpful documents and flyers if you go to insuredbyingram.com/download. I'll put that link below. And you can also get a free download of the book, Rental Property Insurance, An Investor's Guide to Insurance. And again, these will prompt you to put in your email, but rest assured, I will not spam you, market you. I will send you emails so infrequently that by the time you get them, you'll probably forget who I am. Thanks so much, guys. If you have any questions, comments, want any clarification on these, please let me know. I'd be more than happy to help. But again, also remember, I'm not your insurance agent. These are just for educational purposes only. So if you have any questions about your specific situation, it's going to be best to reach out to your insurance agent or your insurance company. Thanks so much. Talk to you guys soon.